What's up, guys? It's March 4th, 2025. Pretty cool day in the markets. We had a gap down with a sell-off and then a rally. Here's daily chart, 15-minute chart. On the daily chart, I'm counting a few legs lower. Leg 1, pull back because it breaks the trend line. Leg 1, pull back. Leg 2, opposite bar, pull back. Leg 3. You can also say this is one leg down, but this daily bar does break the trend line. So leg 1, pull back. Leg 2, pull back. Leg 3. And then with that being said, we also have two legs lower in the trading range here. Leg 1, pull back. Leg 2. And there's a small rally at the end of the day. Hold on, what am I doing? Okay, so this was the last, let's make the daily chart bigger actually. So let's take a look at the daily chart real quick. Rally, pull back to the trend line break, rally, deep trend line break. So now we have a leg 1, pull back, leg 2. That's the wrong thing. Okay, so we have a leg 1, pull back, leg 2, pull back, leg 3. The first pullback here is shallow compared to this pullback. That's the first pullback. So here, oh wow, that's not even, actually, okay, hold on then. Let's do something different. Here's the bear leg. Say this is the top of the trading range. So it breaks out. So this could be the leg. Big down, big up. So trading range, breakout, retest. Starts to trend. They meet 1R. Bulls that break out of here get 1R. Okay. So they get 2R. Trading range behavior. We're in the third leg. Deep pullback, third leg behavior. And now, here, if this was another trading range, bear leg, that's not met, so okay. What I'm trying to say is the last leg in a trading range becomes, the last leg in a trend becomes the first leg in a trading range. And we're starting to see that happen because bulls broke out here and then the market wrapped back into itself, becoming a trading range. We thought we was a bull trend right around here. Last leg in the trend becomes first leg in the trading range. So yeah, pretty interesting where we're at. We have a lot of bear bars below the EMA, which we haven't had in a long time. Last time was in August. Yeah, so here's a 15-minute chart. Easier to see the legs here. Leg 1. So this is between yesterday and today, right? Yesterday is the 3rd. Today. Yeah, so we're going to count these legs. Leg 1, pull back, leg 2, right here. You see leg 1, pull back, leg 2, pull back, gap down, leg 3, higher, low, and it rallies. Remember, there's 3 types of trend line breaks we can get. We can get so bears have a sell, pull back, and they want a new low. That's the best version for the bears. They get a sell, a pullback, and an equal low. That's okay. I mean, bears want a new low to show trending behavior, but at least they were strong enough to get it down to the recent low. And then swing 1 to break out, pull back, higher low. This is the worst situation for the bears, best for the bulls, because now this is a higher low. That's bullish market structure. So those are the 3 options they have now. Same situation happens for the bulls. Rally, trendline break. Bulls want a new high to show they're trending. Rally, trendline break. Bears want an equal, whatever, double top here to show that's kind of more bearish. And then, or the best the bears can do is create a lower high. Is that a lower high, higher low? Yeah, I always get those 2 confused. A lower high, and that's good for the bears because then they want to sell that. So those are 3 types of trend line breaks, but I've been babbling long enough. Let's do the breakdown. Gap down, bar 1 being a bear bar. Gap down, bar 1 is a bear bar. That's good for the bears, bad for the bulls, showing that the gap has continuation, the breakout has continuation. Bar 2 is a bull bar. Bar 2 is also breaking the high of bar 1. So that shows that that's the trend line break for a second leg. Leg 1, pull back, leg 2, pull back, leg 3. 1, 2, 3, 4, 5, 6. 6 bear bars in a row, trying to get a second leg lower. Bar 9 is a shallow first pullback for yeah, shallow pullback. It's also the first reversal attempt. Well, this is a reversal attempt. These are all reversal attempts, but this is the first bull bar at your 6 bear bars. I think it's more of a pullback than a reversal, so it gets very shorted. Bar 10, good looking bear bar with a gap. It's a bad gap because it starts with a bull bar, so bull, bear, bull. Yeah, I said that right. Bull, bear, bull. That's a bad gap because bears want to see 3 bear bars in a row for a gap. Bar 11, these bulls that bought the high of bar 11 made 1R very quickly, so that tells you that a lot of people were looking right there. They made 1R. The market came back to it and then it rallied. So there's your trend line break for the leg 1, pull back leg 2, trend line break. 24 goes one tick below bar 11, so the minimum objective for a second leg for this structure is done. It just has to, I mean, and then, you know, honestly, 11 went one tick below 10, so you could say that was this. Bar 11 went one tick below 10, and you could be like, oh, that already met its second leg. But yeah, you know, that's true. I think this type of momentum at least should have a double bottom or higher low put in before it just goes straight up. And that happens right around here. There's a wedge bottom in here. I'm going to delete this real quick. Leg 1, pull back leg 2. Leg 1, pull back leg 2, pull back leg 3. Wedge bottom. 21, you can see that bulls are willing to buy support. 21 rallied pretty strong. But it still got shorted with 22, 23, and 24. 3 bear bars, but it's late in the trend. If you're looking for a continuation, look at the close of 24. Really bad close. It looks bears sold. It sold off in reverse higher, trapping bears that were shorting lows. Bears have to buy back shorts. At the same time, bulls are buying lows. They're buying wedge bottom. Well, they're not really buying wedge bottom. They're buying support, and they see that the bears have failed 3 times. Then we get a rally here. Rally doesn't look strong at first, but then we start to see 33, 36, and then we see this pullback, and by the time we see 43, 44, 45, that's 3 legs higher. Let me reverse. So here we are. Here's the breakout. This breakout has 3 legs in it. Leg 1, pull back leg 2, pull back leg 3. You could say the breakout restarts with 27. Leg 1, pull back leg 2, pull back leg 3. First reversal 30 fails. If you buy this, you're going to be in a little bit of a drawdown with these 2 bars, but it does rally pretty quick. With this sell-off, I don't think this is the worst buy, but with this sell-off, I think it's a hard buy because we don't even know if this is going to get sold back off. Is this the first gap after a strong bear trend? But we see the close on 32, bad close, and now it starts to look like bears have failed twice. So leg 1, excuse me, for the bears, leg 1, pull back leg 2, 32 closes just below its midpoint, so still good for the bears, but it's not the placement's odd because it's above the EMA, so that shows you that bulls are buying the EMA, or you could say buying the breakout point of 27's high. 4 bars in a row, 33 through 36. Trying to get its own second leg, but 36 looks like it's kind of climactic. It rallied and then sold off. When it sold off, it didn't close far past 35, so it's a bad breakout. But these 4 bars did close past this, so in that sense, the bulls did travel a fair distance, but they all have tails, so it's a bad close. Pull back into the EMA, 40, 41, 42, 43, testing this breakout point. And then 43, 44, 45, good breakout with a bull gap. So here's a gap with 3 bars, 3 of the same colored bars, like this, the opposite. This is weak, this is strong. I had that deep pullback, so we're trading range behavior in the 3rd leg, 46, 47, 48. Deep pullback, 48, 49, testing the breakout point, 43. Then they get a good rally here with its own 3 legs. That gets 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Climactic, look at 60. That's just bad close. It's trying to get its own second leg. And it does. It's not a strong second leg. Leg 1, pull back leg 2, testing here. You could say testing the 50% level of the strong breakout bar. 55, you could say you're testing the high of 54. Then this gets its own 3 legs. Leg 1, pull back leg 2, pull back leg 3. Climactic bar 71. and then bears get 2 legs lower, like 1, pull back like 2. This was pretty crazy to watch. I don't know if you guys were watching it, but it was. I saw 73. I was like, wow, okay, is it gonna bounce? And I was like, oh, that's a pretty weird close. I drew a line here. I was like, well, it kind of closed above this. Then I saw 74. I was like, okay. And then this happened. I was like, dang, I was not expecting that to happen at the end of the day. I thought this rally was pretty good, but this is damaging for sure. Here are the gaps. Gap down. There's one small gaps here, so it's not the strongest trend. Climactic gap, it gets closed quickly. Another gap here gets closed. This gap gets closed. This gap gets tested. This gap got closed, and then all the gaps I actually got closed. It's a training range day. Big down, big up, big down. These gaps got closed here. Where are the measured moves? 3-bar breakout. That worked pretty quick. Is bar 4 a good short? The context is good, but the bar itself I think is bad because it doesn't close far below 3, so it could be a trap. But context for a second leg with bar 2 being the first trend line break, so leg 1 pull back leg 2, 3 is getting followed through. So momentum that's met here. These 3 bars I think look pretty good, but the bears got well, it's training behavior, so deep pullback. Buy around here, maybe buy here. If you bought the high of 21, you wouldn't get you'd still make your money and you wouldn't get stopped out. But really, your stop would be below here, and you might get ticked out with 24. Rally gets its measured move. That's met around here. So you guys know when it's trending, it's all the measured moves pretty much work up until the end. I always feel kind of funny doing it, but I think it's good to just. Measured moves don't mean the price has to go there. It just helps you keep in the the direction of the trend, or measured moves are not the end all and be all. Okay, so this last leg didn't get met. Well, how about this leg? Because there's a pullback right here, 22. Yeah, that's barely met. But then if you fade 60, which I think that's a hard fade. So, but if you were to fade it, you get filled here. Pretty good day. Yeah, so pretty cool. I like talking to you guys. Let me know what you think of streaming versus. I'm trading some lots right now, and so that's why I'm not showing the trading screen. And plus, I kind of actually like talking about the chart with you guys. I don't know. Let me know what you think. If you learned something, you know the drill. Share the show. Don't be a hoe. I'll talk to you guys tomorrow. Thanks for tuning in. Have a good one, everyone. Talk to you later. Bye.